the last topic that I kind of have here on my checklist, which is kind of a good way to go into it, is how people look at the way they purchase real estate. And I know this is something that real estate agents are challenged with when they're talking to their clients, and mortgage lenders as well, because people always say, well, I want to make sure I make a good investment. And what I always tell everybody is your personal home, I mean, there are components to it where maybe you can make some money long-term, but this is a place where you're going to put a roof over your head and you're going to be spending money on maintenance and things to keep up with it. And you're paying to live there. And in my opinion, it's not a investment in the traditional sense of that term. Right. But, you know, what would you say to people who are like, well, I need to get the best loan so that my investment is better? I mean, I'll let you answer that one because I just get confused.
That is such a
it.
loaded question. I don't even know where to start. But I'm like you. I say to people, you know what? It's the house where you're going to live. It's where you're going to raise your family. You're going to set down roots in a community. You're going to invest in your life and your lifestyle. And trying to predict what your house is going to be worth in 5 or 10 years is impossible.
Yeah.
Okay. So I try and dissuade. I mean, some people you can't, but I try and dissuade people from buying that way. If you want to invest in real estate, go buy an investment property, figure out the cash flow on your return, and then buy that property based on whether it works or not. Mm-hmm. That's what I say. But you can't. You know, one close to home situation was years ago when my sister and her now husband were thinking about buying a home, and he's trying to figure out the future value of money to 25 cents a month. And I said, Randy, do you love my sister? He said, yes. I said, do you want to stay married? He said, yes. I said, then buy a house and stop this nonsense. And they bought a house.
Yeah, as long as you make a purchase decision that's within your means of your income and things like that, and it's not going to stress you out where this thing that's supposed to be joyous becomes this burden on you, you know, don't worry about what's going to happen, especially like if you are able to maintain your job and, you know, home values go down. As long as you're making your payment, you're going to be okay. And
yes,
you're buying for a place to live, like you said, Mark. It's an investment in your lifestyle. It's not an investment into your portfolio of assets. Yes. And that's the way I think people should look at it. And they're going to be able to make better decisions that way, in my opinion, too.
Yes.
Because they won't get this myth of like, well, the house price will go up, so we can stretch ourselves now.
Yes.
And it'll all be okay in 5 years because we'll have all this equity, we'll refinance and, you know, blah, blah, blah. Well, tell that to everybody who bought a house in 2006.
And you're talking to one of those. We needed a bedroom. We had a baby. It is what it is, you know?
Yeah. But you made a decision based on your lifestyle and right. what you could afford versus, hey, this thing's going to keep going and we'll be singing in the rain and, you know,
yes,
swimming in coins.
Yes. And I knew at that point in 2006 that the economy was going to turn a corner in not a good way. Mm-hmm. And the day after we closed, I remember thinking to myself, well, what if the market really completely crashes? I said, nah, it's never going to really completely crash. Said, what if it does? What's going to happen?
So it was your fault. You put that energy out there, and that's what happened.
I did. It was my loan that I did for myself that caused the economy to collapse. Correct. That is correct.
Oh, man. I that's great. I mean, so I think really the message to people is there's all of these things out there that you can do with mortgages and things. And as long as you talk to somebody like Mark yourself, who's extremely qualified to have these discussions, you'll make a good decision if you also act rationally. Because, I mean, what it sounds like is some of the guidelines out there don't, you know, necessarily protect consumers against their own, you know, finances. And a lot of consumers think that, but really they're there to protect the banks and what happens when these mortgages are sold, you know, out on secondary markets more so than really, I mean, there's definitely consumer protection stuff out there, don't get me wrong, but most of these guidelines are to protect that money and that loan, not necessarily the individual.
It's a combination. And, you know, consumers are paying higher interest rates right now because of those regulatory pressures. Mm-hmm. The irony of, you know, the laws, the Dodd-Frank and so forth, is that they've cost so much extra overhead and extra work in every loan that consumers are paying significantly higher fees and interest rates because of, you know, we have 4 or 5 times the man hours in every loan than we had in 2007. Now, I'm not saying that we didn't need more man hours. We did, and we wanted greater consumer protections, and we wanted clamp down on all these predatory lenders. But of course, the money was paying our. I'll stop. But but that did not happen. Okay, so it is what it is. The other thing that I can say is talk to your accountant, talk to your financial planner. Don't do it in a bubble. Talk to disinterested parties that can help you make a good decision. And if your loan officer doesn't want to talk to your accountant or your financial planner, he's the wrong loan officer, or your estate attorney. That's that much I can say.
Perfect. Awesome. Well, Mark, thank you so much for sharing all this knowledge with me and with everybody who's watching this somewhere, wherever it is. We'll probably put some links or something below or wherever they will go for people if they want to get in touch with you, Mark.
Thank you.
Or if there's other links that we have that might help further educate people, we'll put those there. But otherwise, I hope that everybody's enjoyed this. I know that I've actually learned a few more things myself, which is always good, always learning. And if there's questions that you guys have as it pertains to this, you can leave a comment or you can reach out to Mark or I, and we'll see what we can do to get that question answered for you. And we just appreciate you guys, tuning in and hearing some things about mortgages and money and real estate.
Thanks, Matt. Thanks for having me.
Yeah, absolutely.
Thank you.